Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. Welcome to the show. It's good to be back. Big shout out to Red Cloud for providing excellent guests. And especially today, we're going to be diving into uranium. It's quite a market it's had in the last year, but especially lately. And joining us is head of research, but also managing director over at Red Cloud, David Talbot. It's a real pleasure to have you here to talk about uranium, to talk about the market, but really to take a look at three of the key factors that are happening. And then if we have enough time, I'm going to try to see if we can pull some of your top picks out of you. But how are you doing today, David? It's a real pleasure to have you here.
Yeah, doing well, Andrew. Thank you very much. It's a pleasure being invited to your show.
Well, it's a real treat. We would love to have people to kind of fill us in, and especially someone with your kind of experience, 20 years capital markets, 10 years specifically in uranium research. If we want to ask someone what their thoughts moving forward, you're the one. So, I think we want to cover a couple of main things. Some in regards to the spot market, as well as obviously the geopolitical risk that's going on, and then basic supply demand. And like I said, if we can get a couple picks out of you, we're going to try. But we'll let you take it away and kind of set us up with, the first of the three main factors that you see moving forward.
Sure. Well, let's talk about physical uranium buying first. I don't think that people can ignore the impact that it has had in the market, specifically in 2021 and now again in 2022. I'd say looking back last year, uranium prices rose about 35% to about $40 by the end of the year. And the key there was about $1.3 billion that Sprott raised and they went on to purchase about 21 million pounds to hold 40 million pounds by the end of the year. Incidentally, they bought another 10 million pounds since. So, and that's got us up to about 58.25 per pound uranium price, just shy of the 59.75 we saw in the second week of March. And that was when the White House was originally considering sanctions on those Russian energy product exports. So, definitely traders jumped into the market at that time. In addition to heavy buying from Sprott, at that time, a $6.50 per pound price jump. That was the second largest daily jump since UxC began its daily quotes. I think that was back in 2009 or so. The peak $60, we're close to that again. It's the highest uranium price has been since after Fukushima in 2011. Prior to the Russian invasion, I don't think there was a lot of risk premium built into the spot price. Most price appreciation seemed to be in response to spot buying, but I don't think that's the case now. So, meanwhile, Sprott does continue to raise money, buy physical uranium. We believe it's approved for another about $2 million to raise, and that's a lot of potential to take a lot of physical out of the market here. Sprott's certainly the leader in this respect. Since the beginning of March alone, it's purchased another 2.2 million pounds, and like I said, holds about 50.2 million pounds, net asset value of about 3.1 billion in total. Now, we don't cover the trust, but for some investors, the Sprott Physical Uranium Trust might be the only way to play the sector.
Yeah, it gives someone a bit of, a bit of a safety to not have to pick specific stocks. It's done very well. Obviously, I think it's up 75% or something since inception. But that, alone is such an incredible, it was a strong move and it's had a massive impact. With that, we can kind of touch on, if we could bring up the Cameco, they have a great price chart that kind of gives people a sense, because you really get to see, like, it's spiked lately, like we've been kind of saying, and certainly past since Fukushima. But when it does spike, it really, really goes. This goes back to whenever you first were getting excited about uranium, and we can see how it can go, and when it goes in a hurry.
Yeah, Cameco is another one of those stocks. Again, it's something I've covered in the past. I don't cover it now. So no ratings, but that's where the generalists, at least in North America, typically put their money and they come in. It's been one of the largest public producers in the world. At least it was until Kazatomprom listed. So.
Yes, no, it's a good name because it's one that people in Canada kind of understand and know, and we can see that spike there in the middle of whenever it really went up there, climbing in 2006 and 2007, peaking dramatically, and I guess that sets up the stage to kind of our next. And we even have a comment here. If Russia cuts off all exports of uranium, where will it come from? That's a good leading in question, because we have this Ukraine, we have this Russia crisis. And a significant portion of all uranium comes from Russia/Kazakhstan. So maybe kind of tell us where that looks like, where we're moving from here, before we even talk about the White House and events of unfolding there.
Sure. If last year was all about physical buying, this year we believe security of supply is really the theme, the name of the game this year. We've seen this before, mid 2000s, like you said. That peak in I believe it was June 2007. That was largely a function of mine site accidents, floods, and fires. Sort of supply disruptions. This time, I think the disruptions might be driven by geopolitics. There were only 15 countries producing uranium in 2020, and they produced about 123 million pounds. But 72% of those pounds came from countries that refused to support the recent UN resolution denouncing the attacks on Ukraine. So you're looking at countries like Russia, Kazakhstan, Uzbekistan, South Africa, Brazil, even Namibia. So the Section 232 review about the American nuclear fuel uranium industry, this was started by a couple of uranium companies a couple of years ago. They foresaw this risk. They saw, there were geopolitical influences that might become problematic at least for U.S. Nuclear power plants. So what we are seeing right now, we've seen a reduction in safe places: Canada, U.S., Australia, Niger. We've seen some development projects in the pipeline in these areas, but certainly not enough to replace any big gaps that emerge. You've mentioned the Russia-Ukraine situation. Things are fluctuating daily there. This is certainly adding to the geopolitical uncertainty. The U.S. utilities are worried about that supply, and rightfully so, because 28% or almost 50 million pounds of global uranium is used by the U.S. and its fleet of 93 reactors globally. 40% of that comes from Russia, Kazakhstan, Uzbekistan, and that's 8% of U.S. electricity generation. So, and on top of that, Russia also provides 20% of enrichment services to both the U.S. and the EU. So we suspect that could be at risk too, beyond bans or imports or exports by either party. There are logistical risks here, inability to pay for uranium deliveries, for example, as banks fear to break sanctions. We've got maybe lack of ships to pick up uranium from the Russian port of St. Petersburg. Yep. You've got Kazakh Uranium, provider of about 41% of global uranium supplies go through St. Petersburg as well. And Russia did suggest earlier this week, that it might cut off deliveries. So now we don't see any immediate disruptions from the Russian deliveries to the U.S. or Europe, but that might change. We're only talking about $350 million worth of business per year, and that pales in comparison to what's already been halted. So we will see. Longer term, I think the security of supply risk will be positive for nuclear power, especially with the EU being pinched with respect to natural gas coming from Russia. This does make energy security paramount. Some countries may expand further into nuclear to compensate. Don't necessarily see any knee-jerk reactions just yet, but I do believe that some EU countries that were looking at Russian-built reactors are now looking elsewhere. That's already played out in Finland, Hungary, and Slovakia. Germany probably the most exposed to natural gas supplies. I don't think they're going to do an about-face here. I think they're down to 3 reactors and still plan to get out of nuclear.
You guys could ask that. It's talk about, to make things a little bit more interesting, is that, you France, who is kind of back on board with nuclear and a bit more of a stronger proponent, whereas you have Germany saying absolutely not, taking a giant step back, basically going back to coal, which is a bit strange for one of the arguably greener type political parties and outspoken advocates for a green change, and yet to ignore the greenest energy that one can get in nuclear seems strange. And maybe kind of tie in another added in there is the incredible growth in the last little while, and I would assume continued in China, which I think that relationship between Russia and China is going to be just fine.
Yeah, demand's about 177, 180 million pounds. That continues to grow. And, like you said, things are looking pretty good globally. France has renewed its interest. South Korea has just elected a pro-nuclear president. The US has halted closures, and he's even building a couple new reactors. And China really seeks to have about 50% more nuclear power than the US in the midterm. That's certainly positive. I do think that mine supply response will largely depend on uranium prices. We are seeing things going in the right direction. Mine production right now about 135 to 140 million pounds, but there is a production gap of about 40 million pounds in there. The gap has been supported by secondary supplies up to this point, but even those are expected to decline from 40 to 50 million pounds down to 25 to 30 million pounds per year. And things like underfeeding is becoming less available, and that's really just excess uranium being sold because of enrichment capacity. So that's coming down as well. And I would expect government supplies to become even more strategic and held for longer periods instead of hitting the markets. But where are we going to get the uranium? I think there's earlier this year Cameco said it would restart the MacArthur River plant, but it probably at a lower production rate, and trim Cigar Lake production. But there might be room to ramp both of these back to levels we saw in 2016. And, with prices up near $60 a pound for the first time since 2011, that might certainly help incentivize these restarts and help incentivize new builds as well. You look at the Kazakh uranium production, it rose 12% last year. We think it could do some more, but that's going to come with some cost and some challenges. China's ramping its share of production. It's bought some mines in various places, including Namibia, but we do have closures in Australia, Niger, Canada that we need to replace as well. So we will see. Near term production, the high grade DASA project in Niger just broke ground last month, and there's also other restarts coming up. Langer Heinrich and Kalkara, Honeymoon, Rosita, Lance, a couple others in the U.S. as well. So, before we go on, I do want to sort of highlight one thing, and that's long-term contracting. I do think the resumption of contracting is very important at sustaining uranium prices. That's the term market, not the spot market, that becomes important. And I think already about 22 million pounds traded in the spot market year to date, dominated by physical buying. And if you look back last year, it was about 16 million pounds at this time, but the buying had already started. Things like Kazatomprom started buying to deliver physical to Yellowcake. Then we saw really an initial flurry of buying by uranium mining companies, which was rather unique last year. And that was 6 months before Sprott even started its buying. But really what we want to talk about is the long-term contracting of the term market. The long-term market volumes are up over 7-fold over last year. This is important. This is what we want. Last year, we only saw about 7 million pounds traded by this time, and that represented about 1/3 of all trading. But year to date, we've already seen 51 million pounds traded in the term market. And this represents about 70% of all uranium trading. And that's probably a high since let's say the 2000s, early 2000s, mid 2000s. So, we might be on pace for utilities to replace the 177 million pounds of uranium that is used by reactors globally. We'll see. Certainly the last couple of months, we're seeing uncertainty, and utilities have started to enter the market.
And before I kind of jump into the unique situation we have, say, locally, like on our continent, because you have to factor in transportation costs, shipping costs that are going on right now. And like you said, there's ships probably stuck at port in St. Petersburg. There's a unique opportunity, and you can tell me if I'm wrong, but with the Biden administration, which Democrats are generally not excited, they've kind of changed their tune, and they've proposed funding, I think, of like $1.85 billion towards the whole U.S. Department of Energy nuclear program, which is a big tip of the hat and a good, strong, hopeful, I guess, sigh of relief, or maybe encouraging to some of the producers that are on the continent and say, listen, we could get you like that chain of custody, that supply chain, we could get you that and not have to ship, not have to deal with exporting and the not only the high costs, but the geopolitical factor.
Yeah, absolutely. I think it really started with that Section 232. A couple of years ago, they looked into the nuclear industry. They looked into the nuclear fuel cycle industry, and specifically uranium. What came directly out of that for the uranium companies was perhaps this uranium reserve, where they wanted to put, let's say, 150 million pounds into buying uranium in conversion and enrichment services as well. And that's a start. It's not an awful big number, 150 million bucks, at $50 a pound. We're beyond that is only 1.5 million pounds worth of uranium. So what's that? That's sort of like a 1.5 ISR mines in the U.S. Certainly it's about 1.5 mines more than we are producing now in the U.S. But it's not all that much. I think what it comes down to is uranium price. Uranium trades $58.25 per pound at spot right now. The term price is let's say $48.50, but that's also 3 weeks out of date. So I think that's going to come up here and closer match the spot price. Our forecast for uranium prices this year $45, next year 50, then 55 and 60 for going on to 2025. So they're certainly ahead of the game, ahead of what we're calling right now. But what I do see is incentive for new production. And we have seen some companies that have even been sitting on the sidelines for the last year or so start to wipe off their projects and say, what can we get into production relatively quickly? That said, execution is another story altogether.
Absolutely. And I think I'm having some mic problems. I've got some comments here, so I will keep my talking down. But this is a good segue into maybe some of the companies that you see that are a good opportunity for people, because at the end of the day, that's what people want to hear. And if we can get a couple out of you, that'd be wonderful.
Sounds good. Just make sure you throw up those disclosures for me. So
yep.
Our top producer pick, I think, is Energy Fuels. We like its ability to ramp up quickly, given it's got 3 ISR facilities, the only conventional mill in the USA. It's also looking to rare earth estimates. Rare earth production. So that's certainly a positive there. On the developer picks, I'd say Next Gen Energy. They continue to permit and develop the Arrow deposit, what we believe is probably the best uranium project in the world, hands down. Global Atomic, they just broke ground on the high-grade DASA project in Niger. Their development ore looks like it's going to help support cash flow as they deliver that to Orano. We've got Consolidated Uranium. They're participating in 3 producing mines as well, moving those forward towards production in the U.S. On the exploration side of things, Valor Metals, they're refocusing on its 43 million pound project in Nunavut. And that's one of the highest grade resources outside of the Athabasca Basin. You start looking at those smaller guys in the Athabasca, I'd say Scar Harbor and Baseload Energy each appear to be on high grade basement mineralization there, and that's something to look forward to. And then your next guest is Labrador Uranium. They just listed and they become a new explorer in the very prolific central mineral belt of Labrador. So they kick off their life with also already considerable uranium and vanadium resources and an awful lot of exploration potential.
Excellent. And I want to kind of throw out there as well, if people would like to get analyst reports and to reach out, you can certainly reach out to me and I can direct you towards Roger over at Red Cloud, Roger Blair. We can get you set up and talking to them. If there's, say, a report from one of these companies or just a general one, happy to do so, but just reach out to us by email and I can put you in touch as well, because at the end of the day, having this kind of list of and in this kind of opportunity we're facing with this shifting energy, it's critical to get the best advice that you can. And we really appreciate Red Cloud, and especially Mr. David Talbot, to come on, get it from someone who's spent a decade in this space and looking at it. And the overall, I mean, it's a pretty unique situation that we're facing right now, and it is this changing world, and it is very exciting.
It certainly is. You know, I started covering the sector in 2007, right at the peak, $136 a pound, and it's been quite a wild ride ever since. So.
Excellent. Well, we can't wait to have you back. I really appreciate you taking the time this morning from all the busy workload, and I'm sure with all this trading going on, it's pretty exciting over there. Thank you so much. And what a great segue too, because our next guest, so stay on, is Labrador Uranium. So thank you so much, Mr. Talbot. Really appreciate it.
Appreciate it, Andrew. Thank you.
Today's company presentations are brought to you by Red Cloud Financial Services and the team at Red Cloud Vancouver. Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs. Tune in every Thursday at 4:15 p.m. Eastern, 1:15 p.m. Pacific for weekly corporate presentations. For more information, visit redcloudfs.com.
And we're back. What a perfect segue. What a good entrance. It's Mr. Stephen Keith, who's the CEO over Labrador Uranium. I don't think we need to explain where you are or what you're up to, but how are you doing this morning?
Thanks, Andrew. I'm doing great. Thank you. And, it sounds like you guys are doing great. That was a really nice introduction from Dave Talbot. Frankly, it just helps my cause.
Yes, it absolutely does. So you know what? We've done a lot of the work as to the general market, and a lot of people that watch my channel, they're generalists. So we've gotten that kind of taken care of. We understand what the situation is, and there's nothing better than having someone in our backyard here in Canada that can help provide us and help shift us to a greener, happier environment. And let's talk about Labrador. I mean, that's a great place for work. They're great for permitting, and also it's a great province that needs a lot of support for work as well. So not to too many of your key points, but you tell me about the projects and what attracted you to it, and as well Labrador.
Excellent. Okay, well, thank you, and thanks for that introduction. So,
yep.
Look, as you pointed out, our name tries to make it pretty easy. It's Labrador Uranium, and we're really excited. I think as of tomorrow, I think we'll have been trading for only 3 weeks, so brand new. But it's a really, the focus and the timing couldn't be better. I think we didn't structure this company because of any other reason that we are long-term believers in uranium. But it helps when you launch and you have the tailwinds, as David was just talking about, in the sector, and it really helps set us up. But, the three key pillars for us and how we got here are first you need assets, but assets in a place that can actually be developed. Most of my career has been in developing countries, mostly in the Americas. And it's been a terrific place to work. But coming back to Canada in a place like Labrador, where different groups consider it one of the top destinations for mining investment in the world, where the regulatory environment is clear and it's well known, right? So it's not like, people may have different views on the Canadian mining sector, but we know what hurdles we have to go through and how to develop it. We know how the investment climate works, and then it behooves companies like ourselves to just do the work properly. So I'm very excited to be in Labrador and in uranium.
Yeah.
But what really brought it, other than the location, was this opportunity came with two things that I find are fundamental to an earlier stage company such as ourselves. So firstly, it's an asset package, right? We are an explorer. And so you want to stack the deck in your favor. Obviously, one doesn't know what's underground until they start drilling and proving it out. But in the last 10 years, our partners are the groups that we brought these assets in from. So it was originally the main asset in this company came out of Consolidated Uranium. So we did a spin out. We immediately did a deal with Altius Minerals, who are based in Newfoundland, and have had a great track record of building an asset base finding partners and growing from there. And a deal that we have announced, hasn't closed yet, is Mega Uranium. So 3 known asset generators and company builders with us put together this asset package. It's unbelievable. So it's about 139,000 hectares. We've consolidated the majority of what is known as the Central Mineral Belt. So it's about where we have is about 125 kilometer long district that we control. That district has been explored for probably over 50 years. Tens of millions of dollars were spent there in the last uranium boom. And now we have the advantage of, in the intervening period between the last uranium boom and today, Altius consolidated the whole base. So we now own this entire district. We have all of that historical data, right? So drilling, geophysics, magnetics, soil sampling, stream sampling. So we have all of that data. And now it's a matter of proving what we have. So it's a great starter kit, including what I always fail to mention is the first asset we started from actually has a historical uranium resource. So the Morin Lake asset has a historical uranium and vanadium resource that we can grow. The past owners spent $25 million on the asset, and we know that it's open at depth, and there's multiple other targets around it. So the starter kit with the assets, it's something we can grow this resource from. There are, with the work done by Altius and the groups we brought in, we've identified over 140 targets that we need to get in on, which is a bit crazy.
That's a lot.
So now the key part is, so we believe we have the asset base. We've got a historical resource, but then the next key drive, and again, the tailwinds of uranium in a great jurisdiction. And that's our starter kit, but then we're an early company, right? So to me, the very first thing, especially as, I started off on the banking side and as an investor, one of the first things I look at is, how do I know that people are going to do the proper work? So that's about the right team. So when we built the company, we focused very much on the fact that we need a group of company builders that were market focused. So we built a board of guys who'd built companies before, like Phil Williams, who built Consolidated Uranium, like Richard Patricio, who's been at the helm of Mega Uranium for quite a long time and done a great job there. And then we brought in Justin Reed, who's built Troilus Gold, built other companies, is actually someone who knows this district. He was part of the deal, part of the team that did the deal that actually brought one of the fundamental assets within this basin is the Michelin project, which is now owned by Paladin. Well, Justin was part of the team that got Paladin that data. So we have this amazing board that knows how to build companies. We've got this great asset package with an anchor resource right beside a known uranium resource. Like that Paladin resource, the Michelin deposit, is 120 million pounds of uranium. And now it's a matter of, we have to do our job to make these bigger discoveries and grow what we have. And that is the final piece, which is a great exploration team. So we've got great geologists who know how to do the on-the-ground work. And then attaching to that, we're bringing what we're calling a modern data-focused approach, because with the amount of historical data and with the massive land package and number of targets we have, we really have to refine that to something that is more manageable. Yes, and so we brought in, part of our team has expertise in actually building out machine learning programs that they have applied to exploration. They've won awards for that and being able to use this properly. And so now our job is to use guys like you see here, Paul Pearson and Drew Heisman, to work on the machine learning. It is very supervised. It requires good geologists because people are so focused on AI, and that's terrific. But it is only as good as the quality of the information you feed it. We have lots of that data. How do you feed the information? But you have to, and I'm going at a very low level here. It's not what I do. You have to.
It's okay. It's mostly generalist, so it's okay. But that interwinding of new technology, because people kind of joke around that mining's like 30 years behind, but it's not. It's just because we haven't been in the limelight, and seeing the new technology and speaking to it, I think brings a lot of not only comfort, but it lets people know, listen, some of these other areas that people have looked at and spent money in the past, they're using technology that's so out of date, and we're so technically proficient today That's why if someone looks and go, well, how come you could find something today you didn't see 10, 20, 30 years ago? Go, well, this is why.
Yeah. Well, and it's being able to process information. So 50 years of data over 100 and almost 40,000 hectares. How do you do something manageable with that? And it's got to be more than, even though we've got great people on team just looking at individual maps. And we know with existing deposits in this basin, we have a pretty good idea of what controls or creates these deposits. And that's the goal. Feed in the information, teach it what's finding. Then you go back out into the field, you refine your data. And we think we should be able to find some pretty extraordinary targets here. All the while having this base resource that we can grow from. So there's more old school building on the resource and drilling, but where are those monster targets? And that's where that two-pronged approach works. So it's a very exciting time.
Yeah. So those 140 targets, did that go through that same type of AI or machine learning curve, or was that the ones you found before to then narrow down from that 140?
So it's an ish.
Okay.
So what happened is when the package was being put together, Altius Minerals, who owned it at first, would put the package together, put together what they called the Central Mineral Belt Working Group. And that group, different outside consultants and experts came in and started processing all that historical data. And if you look at the map in front of you there, every one of those black dots is a known uranium occurrence. So they did process the data. They did start going through it, but it was at a very high level. But that first pass generated 146 targets.
Cool.
So now our job is to get that to something more manageable.
No, but that's great because I was going to say 100. That's excellent. And it's just, I mean, but then it's kind of almost like, okay, that's too many targets. So, but That's wonderful to see. It's a long belt. I mean, that's 126 kilometers, a ton of targets. And then that to my mind goes, well, that's a great place to start rather than, we have 4 anomalies. That's a lot, it's a lot less work, but it's also like, that's 4 shots here. There's 140 that are giving you indicators that are worth working on. That seems very optimistic to say the least.
Look, I think you're exactly right. First, to use a sports analogy, we have lots of shots on net.
Yeah.
The key is we want to create the quality shots because you can't take 146. You go bankrupt and it'll take you 50 years, right? So, But again, with the historical data, you can refine it down. One thing to realize also about this basin is, obviously in our name, we're a uranium-focused company, but there's probably more hits of copper in this belt than there is uranium. There are other commodities that come up here. Our main target right now, our Morin Lake asset, is actually a vanadium and uranium project.
Interesting, yes.
And some of the targets that the guys at the Altius team started looking for were IOCG targets. So we expect to find quite a lot. We know there's a lot of smoke in this system. We know there's something here. Now we just have to find where the big things are. We don't want to chase the smaller ones. Let's go get the big ones to float to the top.
Yeah, I mean, I could talk about vanadium. Well, that's for another day, but I'm a big fan of vanadium. I think there's a huge future with it. So that's wonderful that that's there. It's more than just a credit. Also interesting that if you did, I mean, if there's copper, you've got an ICG occurrence, not to look too far in the future, but you think, maybe there's another spin out on a copper play if you find something. Who knows?
Yeah.
I don't, I'm just playing maybes, but that's the type of things people like. It gives like not a whole bunch of shots. It's like, it's good to know, okay, wait a second. They have no problem doing spin outs because you just did it. They've got a team that's done this before. They're very comfortable, but they're technically proficient. It's a clean new shell. I mean, that's another very big positive. If you want to take a shot at something, but there's all these other possible occurrences that are also critical. Less people know about vanadium, but certainly copper.
Yeah. Well, and look, in the very end, our job is to make investors money, right? I find we're an industry that sometimes gets stuck trying to build a specific project because we fall in love with it, or chasing a specific thing because, someone did a thesis or someone has this idea. We have to deliver. And so obviously our focus is uranium. We believe we have a few projects that can turn into something here. But if we find other monsters out there that have value, we're not going to ignore them because that's just what you have to do. And if it's a separate company or the same company, those are decisions you make later. But it just comes down to what is in the best interest of investors, right? Same reason we have Morin Lake is as Consolidated Uranium started to grow and look at more advanced targets, they knew there was value here, but they weren't going to be able to spend the time on it. So how do you grow that value knowing that it couldn't be within the one? You spin it out. We added assets. We brought in a team, and hopefully that's a model that will work. But before we create the second or third spin out, if those ever exist, let's do some discovering first.
Yes, but it's good because whenever I have to look at like a model as to why I like certain companies and not, is that a good tell is at the start, and as a company is growing, is okay, who's on the board, and that'll give you a good indication. Okay, they've got an M&A person, they've got a couple of this, of course, strong geos on the team. But when you see types of things, you go, okay, I could see like where they're thinking. Do they have the expertise involved to do? There's companies out there that'll just flat out say, we're on a big M&A buying spree. Like, okay, do you have the team? Like, oh, there they are. Okay, yeah. So it's nice to see on your board as well. You've got this team that can certainly produce and generate generate business if it comes across. So it's a wonderful thing to see.
Yeah. No, we're excited. We really think it's a great starter kit. I'm really impressed with our board, especially for our size. I'm very excited to start getting the geos, getting their work done, and just start developing, right? Like, our job now is straightforward. We're well capitalized. We've got an incredible investor base. We've got this land package. Now it's up to us to start putting the money in the ground, and it is a very exciting time.
And you've got cash as well. Like I'm now, it might not be up to the second, but it's like 7 million cash, something.
Yeah, 7.5 million cash. Yeah, and that's all hard dollars. So, and we've got and most of that came out of a singular $8 million financing we did last year. Great support, and the majority of that are long uranium holders. So we think we've got a really nice foundation to build from.
Excellent. Okay, just so if someone's looking to go, okay, excellent, you got my attention. What's something that we're going to want to look for, like short term? If they're looking for, okay, what's my first milestone, or what are you guys doing that I can go, okay, great, like kind of a yardstick.
So look, in the end, in exploration, in the very end, it's about making discoveries, and we're not going to be able to get a drill on the ground till the summer, so we're not going to get those kinds of results. That being said, we are working through the machine learning program, and I do hope that with that we can start talking about where our priority targets are and why. I think right now the low-hanging fruit for us is just showing that we're serious. So the permits to get in there, starting to do the work with the local communities, building out the exploration team and getting the drills going, probably announcing things, not just the permits, but the exploration budget and plan, and just getting some of that machine learning data. But so there will be a lot coming out of us. There is, we're obviously have to develop our own technical reports of 43-101 for Moran Lake and the Central Mineral Belt. So we'll get more potential of getting people understanding a little more geologically of what's going on. And then in the latter half of the year, hopefully we'll be more results driven. And that's what we've got to get to. Excellent.
Well, it's going to be an exciting year, and we're looking forward to any news flow that comes out of you, and especially even myself. I mean, I like data. I'm a techie kind of guy. To see those targets get narrowed down, I think that's a fun conversation as well. So it's a real pleasure. It was a good tip of the hat from Mr. David Talbot as well. So, we look forward to watching to see what comes out of you guys, and I really appreciate you being on the show.
Look, I appreciate your time, Andrew, and David's time for telling everybody why we're doing what we're doing. But this was great. I appreciate it. Thank you.
Have a good one. Take care.
Thank you.
And goodbye, everyone.